The gold price has soared above $3,100 per ounce over U.S. President Donald Trump's tariffs concerns and the potential economic fallout. Trump's actions, combined with geopolitical worries, have driven a fresh wave of investments into the safe haven asset. Spot gold prices hit a record high of $3,120 per ounce. Gold prices have hit multiple record highs, gaining over 18% so far this year. Bullion has capitalized on its cachet as a hedge against economic and geopolitical turbulence. Earlier this month, it breached the psychological $3,000 an ounce mark for the first time, a significant milestone. Its rally earlier today has prompted multiple banks to increase their price forecast for gold this year. U.S. gold futures were up 1.1% at $3,148. The Purchasing Managers Index PMI for China's manufacturing sector came in at 50.5 points in March. This is up 0.3 points from February, according to data from the China Federation of Logistics and Purchasing and the National Bureau of Statistics. The recent data marked the second consecutive month China's PMI remaining above the 50 points threshold, indicating expansion. Both production and market demand showed signs of stronger growth. The sub-indices of production and new orders came in at 52.6 and 51.8, up 0.1 points and 0.7 points, respectively. Fueled by the rebound in the manufacturing sector, surveyed businesses indicated stronger willingness to make purchases. The Purchasing Volume Index registered at 51.8 points in March, maintaining the expansion for the second consecutive month. The March PMI for the equipment manufacturing sector stood at 52 points. That's up 1.2 points from February and reaching its highest level since April 2023, while the PMI for the high-tech manufacturing sector reached 52.3 points, rising by 1.4 points month on month. All right, Asian markets mostly were falling sharply today. This followed further losses on U.S. markets on Friday. Like other market players, Asian investors are concerned about the trade wars that look likely, a slowing U.S. economy, as well as higher than expected inflation in that country. Thailand's local stock exchange also experienced losses following a powerful earthquake centered in Myanmar, the impacts of which extended to other Asian countries. The Nikkei share average plunged by 3.92%, let's just call it 4%. The Hang Seng Index fell by 1.2%, while the Shanghai Composite Index lost 0.46%. U.S. stocks continued their sell-off streak, with tech stocks leading the decline. The tariff deadline this Wednesday has seen sentiment badly affected due to the uncertainty. Meanwhile, China is on record to say that it will retaliate to any further tariffs to the United States, with the stakes being very high for everyone. The Dow Jones Industrial Average declined by 1.7%. The S&P 500 gave up 2%, while the Nasdaq Composite Index lost 2.7%. All right, looking at our local indicators, we see that the all-share index is currently trading in negative territory, down 0.5%. In terms of the currency, we see that the rand is trading at 18.28 against the US dollar, 19.78 against the euro, and 22.63 vis-a-vis the British pound. On the commodity front, we see that gold is trading at $3,116 an ounce, platinum at $997 an ounce, while Brent crude oil is trading at $73.15 a barrel. All right, let's get into conversation now with Gary Boyson. He is a portfolio manager from Rand Swiss. Thanks very much, Gary, for joining us. So market players must feel like they're in a nightmare currently, and they're hoping for more clarity on the Trump tariffs come the 2nd of April. But the question is, are they going to get it?
No, it's a good question. I don't think that there's going to be any clarity when it comes to the 2nd of April, at least, which they're talking about Liberation Day. where he's going to impose reciprocal dollar-for-dollar tariffs on every nation that has levied duties on U.S. goods. Now, the problem with Donald Trump's policy is that it's incredibly uncertain, because even though the tariffs might be levied on the 2nd of April, which will be this Wednesday, it's easy to see them suddenly reversed. And we know that he uses them as a bargaining tactic. We've seen it even with the threats that we've seen against Iran recently, talking about bombing Iran if they don't come to the table around a nuclear deal, and saying that he will immediately slap tariffs on them. He's talking about tariffs against Russia if we don't see some sort of meaningful conclusion of the Ukraine-Russia war. So this is a very blunt instrument that he's using, and it's very uncertain because it often reverses.
Yeah, he's becoming the tariff president, if you like. So I see Donald Trump has threatened countries who import oil from Venezuela. He's threatening them that he'll impose sanctions on them, while at the same time OPEC Plus are expected to add more product, that is more oil, into the market at the beginning of April. How are you seeing the price dynamics of oil? I mean, I see that the oil price has ticked up slightly, but what are the dynamics as you see them?
Yeah, so it's an incredibly dynamic market, and for all the moving parts that we're looking at the moment, the Brent crude oil price has actually been remarkably stable. So we're trading, call it $74 a barrel at the moment, and it seems that most estimates are to set up a range between $65 and $75 a barrel, because we know that Donald Trump wants lower oil prices. At the same time, the idea of levying tariffs on Russia or Venezuela or Iran, and making their oil more expensive should lead to a higher oil price. But at the same time, the market's almost interpreting this as tariffs will actually constrict global trade. And because of the constriction of global trade, you'll actually see less demand, and you should see oil prices falling, even though there will be tariffs in place. The other explanation, as you said, is that we've seen OPEC Plus, which were largely expected to maintain their output cuts, starting to increase output across April and May. That's obviously going to put downward pressure on the oil price as well. We've already seen Saudi Arabia specifically lowering prices for oil buyers coming out of Asia. So yeah, definitely at the moment a lot of moving parts in the oil market, but the oil price actually remarkably stable at around $74 a barrel.
Yeah. So the rand has lost momentum with more of a weaker bias. I suppose this is likely to be the order of the day given what's happening externally. But then, of course, locally as well, there are worries about the stability, viability of the GNU.
Yeah, absolutely. So we have seen some of the rand strength that we've seen recently, and I kind of put rand strength in inverted commas because a lot of this has been dollar weakness. We've seen the dollar index pulling back from around 110 post the US election. It's sitting at around 104 at the moment. So we have seen a lot of this, the move in the US dollar coming from international factors, and at least in the rand dollar exchange rate coming from international factors. But there's no doubt, if you look at emerging market currencies, the rand has been gaining against other emerging market currencies as optimism around the GNU has expanded. And we can see how sensitive the rand is to local issues at the moment. So on Friday, when we heard that negotiations had stopped between the ANC and the DA around, obviously coming to an agreement around the budget and the proposed VAT increase, the rand immediately weakened 20 cents. When 2 hours later we found out that back channels were still open and that the discussion was ongoing, that it looked like they were very close to an agreement, we immediately saw a re-rating and a move back to around 1820. So, we are very sensitive to those GNU issues at the moment. And while the deal does look to be going ahead between the ANC and the DA, it looks like the current proposal from the DA is that we'll get a 0.5% VAT increase for 1 year, but with the potential, if savings come through from the fiscus, that they'll be able to reverse that. And we aren't going to see a 0.5% each year for the next 2 years, which I think is optimistic for most consumers in South Africa. But at the moment, it remains to be seen what the final deal looks like. And we do know that our local currency is going to be sensitive to whatever the result is.
Yeah, indeed. Gary, we're going to leave it there. We've run out of time, but thank you very much for your time and insights as always. Gary Boyson, he's a portfolio manager at Rand Swiss.